Hi, welcome back to Talk of the Town. Michael Osteen with Wren Capital stops by today to discuss investment alternatives with above average returns. Michael, welcome to the show.
Thank you, Sandy.
That's always a hot topic, isn't it, when you tell somebody they're going to make above average returns on their money?
Yes, that is very, very true. Very popular.
So tell us a little bit about Wren Capital.
Okay, so basically we research publicly traded companies for the sole purpose of investing my own capital to get higher returns. Okay, then we turn around and offer that exact same research to individuals via an online subscription service for a flat annual fee. So to give you some numbers, for 1 year we have a return of 44%. 3 years it's a little over 36%. Now, to put that in perspective, look at a mutual fund. A more popular one is the S&P 500 ETF. For 1 year, their return is around 17.1%. 3 years, it's 10.25%.
Wow, that's pretty incredible.
Mm-hmm.
I mean, that's quite a difference. So how did you come up with this unique business idea?
Well, Sandy, originally I did it for my okay, well, so you've heard the expression that necessity is the mother of invention. So I looked at the various choices that were out there, and I wanted high returns without paying high fees, and I didn't see that. So I came up with it myself, and then it's evolved into a business model. So I'll give you a couple examples. Wealth management and hedge funds will require you to have $500,000 million or more. Then they charge you a flat 2 and 20 structure. They charge you 2% of the assets under management, regardless of whether you make money or not. Mm-hmm. Then if you happen to make money, they charge you an additional 20% on top of that. So you make good returns initially, but then they're depleted by the high fees. So I didn't like that choice.
Right.
Okay. The other choice was mutual funds. Mutual funds have lower fees. However, there's thousands upon thousands of mutual funds. So their business model is volume. So they're interested in make money every time you buy and sell, irregardless of whether the individual investor makes money or not. So I didn't like that alternative either. So the business model I came up with is an objective where it is aligned, the company's alignment and philosophy is aligned with that of the individual. Very simple, to make as much money as you possibly can, but with low fees.
And so how does your research benefit your investors?
Well, okay, so basically it is a subscription service, okay, and the individual investor is totally in control. So what happens is the research gives you the information as to which stock to buy and at what price, and when to sell it and at what price, in order to maximize your returns, okay? And I'll give you an example. So I use value investing philosophy, fundamental analysis. In 2014, I did analysis of Intel. I looked at the individual company, 3 of the competitors, and the industry as a whole. And I determined at that point in time it was valued or worth about $35 and some change per share. It was going for, Mr. Market was selling it at the time on the market for $25 and some change. So I offered that research. I invested my own capital into it. I actually put $50,000 in it. If you look at Intel today, it's up around 36%. So in addition to getting the research, and it tells you what to buy and when, you also, the structure of the business is that we never handle anyone's money. There's no minimum capital required. You don't pay a commission, and we don't take a percentage of your profits.
Yeah, that's pretty amazing. So can you give us a few examples of the past investment research and your results?
Sure. So I've got 3 here I'll go over briefly. So we bought McGraw-Hill back in February 2013, had it less than a year. We sold it in November that year. So for that one position we made 67%. If you analyze it, it's a little over 100% because it was less than a year. Another example is Media General. We bought that in April 2013, sold it in February 16, so I had about 3 years. So for that individual investment, we had a gain of 121%. Annualized, since we had it for 3 years, 32%. The third example here is IDX Pharmaceutical. We bought it in December 2013. Merck came along and bought the company out because it was undervalued in August of 2014. So a very short time frame we held that. The return was 451%. Annualized, it was 989%.
Wow. Wow. We will have all your information on the screen. We thank you so much for joining us. Great information.
Thank you, Sandy. Appreciate it.
And we thank you so much for joining us on today's Talk of the Town.